What do you say to someone, a couple, for example, who have essentially invested their retirement future in the equity in their home, and they have a high mortgage on an overpriced house? Now, if the value of that home on the open market goes down, they may end up not even getting back the amount of mortgage that they owe, and that's their retirement nest egg. That's
Right.
their insurance policy. How do you prepare or counsel people to avoid that situation or to deal with it if in fact they're confronted by it?
Yeah, well, I talked about that in the book too. You cannot use your home as a piggy bank for your retirement. It is not a piggy bank. It is a roof over your head. And this understanding of trying to buy too much house, mega mansions, etc., on the notion that you will downsize later and sell it to someone else at an inflated price,
Yes.
I think is a bad plan.
But it's pretty popular. You'd
It's
have to
very
concede
popular.
that.
And I meet many boomers each week who tell me the exact same thing.
Sure.
And I say to them, sell your house sooner rather than later.
Right.
If your plan is that you've got too much housing and you need to take some capital out of it to sustain your retirement, do it sooner rather than later, because there are a lot of folks that are planning to do something like that in the next 2, 3, 4, 5 years. And if you factor onto that increased rates from where we are today, unemployment that is still going to be shaky, I think, for the next 5 to 10 years perhaps. We're not going to have full employment in our economy for some time. I think you're going to find many less people lining up to buy those $1 million mansions, if you will.
So just before the break here, a good time to sell right now, not a great time to buy.
I would say no. I mean, there are examples where, you know, you see a house and it's perfect for you and you say, I want this house. I'll be happy in this house.
And I can afford it.
And I can afford it, and
Right.
I'm good here for the next 10 years at least. If that's your scenario, that's different.
Sure.
If you're looking at it on any kind of a flip it or trade it, or I hope to sell it within the next 2, 3, 4, 5 years, I would say don't do it, because valuations would suggest, and there's lots of lengthy reports that have been done on this lately that will show you that renting is actually more affordable today.
Our very special guest this weekend is the very dynamic Danielle Park, and we're back with lots more here on the Money and Wealth Show in just a minute.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.
Welcome back to this week's edition of the Money and Wealth Show. I'm Sterling Fox. Our special guest is Danielle Park, a certified financial analyst, a former lawyer, and a much sought-after speaker across the circuit in Canada. And Danielle, we were talking before the break about houses and homes and the emotional attachment that people have to their homes, which in many cases causes us to make poor decisions, and the fact that we have limited horizons. No matter how well taught we've been, we find it very difficult to see, well, beyond the end of our noses in time. A couple of years versus the 20-year line you suggest is smarter. I want to focus for a moment, if you don't mind, on CMHC. You and I talked on the radio a few weeks ago, and during that conversation, you predicted that CMHC here in Canada might just suffer the same fate as Fannie Mae and Freddie Mac did in the United States. Why do you predict that, and what would that fate look like in Canadian terms?
Well, in Canadian terms, I think it might not be quite as dramatic in terms of, I think Fannie and Freddie are not sustainable organizations, and they probably have to be wound down. The question is how, and how is that possible when it's holding the bag, if you will, for the entire mortgage market in the United States. The problem with the Canadian mortgage market is the government stepped in to rescue it and has reinflated by backing all of the mortgages basically that have been underwritten in Canada in the last 2 years. So what you've seen is a CMHC that was there as a lender to help only initial buyers enter the mortgage market. That was originally the plan. But what you've seen in the last couple of years, where people were prompted to buy real estate no matter what, a whole bunch of people that ought not to really have homes have now got homes. And they got homes by buying with next to nothing down, by taking ridiculously long amortization periods, 40 years for an example. And our government underwrote the risk on that. So you've got CMHC issuing all these mortgage-backed securities to all the Canadian populist pension funds and various institutions. Does this not sound familiar?
So CMHC has raised money to insure all of these mortgages, some of which are pretty questionable on a good day. And they've raised money by selling bonds to various institutions across Canada.
And they underwrite the risk, right? So they say to the banks aren't actually holding a lot of the bag on this, because if Joe and Jane can't pay their mortgage, the bank will then say, well, to CMHC, well, you insured the mortgage, so pay us and any loss that we take on the foreclosure, whatever goes on. But when you've got property prices that have gone into bubbledom and you've got over-levered consumers, savings rates at the floor, so Canadians don't have savings. They have money supposedly in their house, and they have leverage against that.
Right.
Okay?
Right.
So what I'm saying is, if you get a housing market that starts deflating, or even going sideways for a long time, a period of years, it's one or the other that's likely to come out of this scenario. You don't get this straight up forever stuff. It's either a pretty significant decline and or a very sideways market for 10 to 15 years. People are going to have trouble paying their mortgages. And the government has ultimately backstopped that through CMHC. And a couple of years ago, the politicians were all talking about how wonderful it was that we'd increased the home ownership ratio in Canada to like 69%. Wasn't this wonderful? No, because there's 4 or 5% of the population that now hold houses that can't keep those houses.
That shouldn't have been, it's same as in the States then. These people should have never been given mortgages in the first
place. It's
place.
all those people at the margin that create the crisis, okay? Because they cannot pay their mortgage once rates go up, and they try and dump their house, and the spiral comes. And the losses come because housing, it shouldn't be at the prices it is. And so then you get this whole crisis about who's insured the debt and, the usual suspects.
So if Fannie Mae and Freddie Mac, it doesn't fall off the tongue easily, it's not our show. If they had to be bailed out to the tune of mega billions of dollars, is it your prediction then that we, the taxpayers of Canada, are likely to be on the hook for a multi-billion-dollar similar bailout of CMHC, and inside what kind of time frame? 2 years, 5 years?
Well, you have to remember we're a tenth of the population, right? So all the numbers come down from what happened in the U.S.
Still big bucks.
But it's still only like, the 30 million of us that are having to carry the weight are still going to be heavily encumbered by it in terms of taxpayer responsibility. So yeah, something along those lines. I just, I'm very simple. I have to add the math up. And if the math doesn't work, and it doesn't, and while CMHC was talking about how they were going to become the 6th largest financial institution in Canada, they're on the path to that, but all on the back of an over-levered, overvalued housing market and 75-year lows in rates. So, I don't make the rules about this. I just have studied history enough to know that this is crisis in the making, classic stuff. And Canadian government didn't see it coming. We've been still talking about how great Canada is lately. And the loonie at par, this is all cause for celebration, except that it'll now be a slowing effect on our economy, and we've still got high unemployment and rates are heading higher. These things we can't escape. So